The past 2 years posed challenges for used car shoppers due to the microchip shortage impacting new car inventory. As a result, shoppers turned to used vehicles, leading to reduced inventory and increased prices. While some buyers opted to wait for more options, others were priced out of the car market. Moving into 2023, there are promising signs that used car prices have peaked and will gradually decline. Here's an overview of the current market and what buyers can expect when purchasing or trading in a used car in 2023. In 2022, the global automotive industry faced significant challenges such as high interest rates, supply chain issues, and recessionary fears. Shortages in semiconductors and supplies resulted in low car production and limited inventory. However, as factories increase their pace, experts predict increased car purchases this year, with car companies potentially reducing prices to manage rising interest rates. The Consumer Price Index tracks monthly changes in consumer spending on goods and services. The November report showed a 2.9% decrease in spending on used cars and trucks compared to October 2022, marking the 5th consecutive month of decline. In contrast, new car spending significantly increased by 7.2% during the same period, with the overall index rising by 7.1%. As new car production improves, the demand for used vehicles will decrease, resulting in lower prices throughout the year. Automotive analysts agree that used car prices likely reached their peak after a 43% increase from 2020 to 2022. Experts estimate a 10 to 20% drop in used car prices in 2023. Conversely, new car prices are expected to decrease modestly by 2.5 to 5%. Moreover, average used car prices among expert dealers have been declining after peaking at $25,721 in February. In October 2023, the average price for all used cars was $23,499. Down 3.4% compared to 1 year prior and 7.8% compared to April 2022. This downward trend continued in November 2022, with an average used car price of $23,000, representing a nearly 8% drop from the same time the previous year. Popular models also experienced price decreases. The used price across all average model years of the Chevrolet Silverado 1500 dropped by approximately 11% from 2021 to 2022. Prices for the Ford Explorer are down around 9 to 10%, with averages of $29,590 and $23,499, respectively. Other popular used pickups like Ford's average price of $27,619 and the Toyota Tacoma at around $30,988 saw prices decline by approximately 6% annually. Best-selling compact SUVs such as the Honda CR-V and Toyota RAV4 saw average price decreases of 2.4% and 5.3% respectively. However, this downward trend doesn't apply to most Toyota sedans. The average price of a used Toyota Camry increased by 0.6% year over year, reaching $18,873, while the average cost of a used Corolla remained unchanged at $16,574. Unlike traditional downturns, most analysts anticipate a rise in global auto sales in 2023. The onset of the 2020 pandemic had already pushed car sales to recessionary levels worldwide. The COVID-19 pandemic disrupted manufacturing and supply chains, forcing automakers to reduce production. The resulting shortage of new cars, trucks, and SUVs led to higher prices for the available vehicles. While the new vehicle supply is gradually improving, the car industry now faces a demand problem. This could impact profits in 2023 despite the supply recovery. It has been projected that there will be approximately 14.1 million new vehicle sales in 2023, with U.S. auto sales expected to reach around 13.7 million. In 2021, American sales were at 15.1 million, and in 2020, they reached 14.6 million. S&P Global Mobility forecasts nearly 83.6 million new car sales globally in 2023. Representing a 5.6% increase from the previous year. Additionally, they predict a 7% sales increase to approximately 14.8 million units in America in 2023. It has been observed that the anticipated increase in auto sales comes as lower income and subprime borrowers, who would typically avoid the new vehicle segment during a recession, have already done so due to low inventories and high prices. Despite these price challenges, the electric vehicle, EV, market continues to grow. In 2019, Americans purchased nearly 326,000 electric vehicles, and in the first 11 months of 2022, buyers purchased 724,000. These numbers could have been even higher without supply chain issues. New EVs, such as the Ford F-150 Lightning, Tesla Model Y, and Rivian R1S have long wait lists, and the introduction of new models from established and new brands like Fisker makes EVs more accessible. However, high prices and changes in subsidies for EVs may dampen the excitement. Persistent supply chain issues and material sourcing challenges contribute to the high costs of new vehicles, particularly for EVs. The Chevy Bolt EV was an exception with significant price cuts amidst spiking MSRP in the market. The prices of used vehicles, which reached extreme levels in 2022, have already started to decline. While they may continue to decrease in 2023, the drop may not be as significant as buyers hope. In November 2022, used car prices fell for the fifth consecutive month and experienced year-over-year decline for the first time since the pandemic. The average wholesale price of all vehicles was $15,254 in October, down 12.3% from its peak in May. However, it is important to note that this price is still 37% higher than November 2019. The chip shortage has resulted in high prices for new cars, causing buyers to turn to used models in the past 2 years. Analysts anticipate a divergence in new and used vehicle prices. A November report suggests that new car prices may decrease by no more than 5% in 2023, while used car prices could contract by 10 to 20%. Late-model cars face greater pressure as they experienced significant production cuts during the COVID-19 pandemic, and the decline in new car leasing since 2020 means there are limited options, leading to higher prices. However, the supply of new vehicles has started to improve since September, and this positive trend is expected to continue in 2023. Despite talks of production limitations and incentives on new cars, automakers are unlikely to hold back when supplies are flowing. The result could potentially be appealing financing deals on new 2023 vehicles, while models from 2020 through 2022 remain expensive. Experts have acknowledged that rising interest rates play a role. But with loan terms averaging around 5 to 7 years, it poses less of a problem compared to the issue of supply. This factor could make new vehicles more enticing as they generally qualify for lower interest rates, even if overall rates are higher. So, while you can expect car prices to decrease in 2023, it may require some effort on the buyer's part. Car dealers are currently holding out for higher prices, hoping that buyers who are not up to date with the car market will unknowingly enter their showrooms. When the availability of used cars became scarce, the trade-in value soared as dealers aimed to fill their empty lots. Despite the challenges faced by shoppers, those who had a car to trade in or sell were presented with a profitable opportunity to receive a substantial amount for their current vehicle. Analysts have reported that the average trade-in value reached a record high of $10,381 in June, representing a 49% increase from the same period in the previous year. However, after consistently surpassing the $10,000 mark for 3 months, the average trade-in values have now declined. According to experts' December sales chart, the average trade-in currently brings in $9,316, reflecting a 3.1% decrease from 2021 and a decrease of $786 from the peak in June 2022. Although trade-ins continue to generate significantly higher values compared to previous years, where the average rate was $5,626 in December 2020, it is likely that these values will continue to decrease in the upcoming months, along with the decline in used car prices.